Banks or cryptocurrencies? In the past few years, cryptocurrencies have grown as an alternative to traditional banking. Banks and cryptocurrencies are both important parts of the financial world, but they work in a very different way. Banks have been around for hundreds of years and they are an important part of the economy around the world. They offer a wide range of financial services such as checking and savings accounts, loans, mortgages, and credit cards. Central authorities like the Federal Reserve in the United States keep an eye on banks and make sure they follow the rules. On the other hand, cryptocurrencies are a fairly new addition to the world of finance. They are digital currencies that don't have a central bank or government that controls them. Bitcoin, the first and best known cryptocurrency, was created in 2009, and since then it has given traditional banks a lot to worry about. Even though banks and cryptocurrencies both serve similar functions in terms of storing and transferring value, there are some fundamental differences between them that have led to debates about their strengths and weaknesses. Centralization is one of the biggest differences between banks and cryptocurrencies. Banks are centralized institutions that are controlled by a central authority, such as the government. They are in charge of keeping and managing their customers' money. They have to follow strict rules and regulations that are meant to protect consumers and prevent fraud. On the other hand, cryptocurrencies are decentralized, which means that there is no central authority that controls them. Transactions are recorded on a public ledger, also known as the blockchain. This ledger is kept up to date by a network of users from all over the world. This lack of centralization gives users more control over their assets and makes the need of a middleman unnecessary. Another big difference between banks and crypto is volatility, and that is because banks operate using fiat money such as the dollar and the euro, which are way less volatile comparing to cryptocurrencies. Fiat currencies are also issued by the central banks. However, cryptocurrencies are based on blockchain technology, which makes it possible to create and transfer digital assets anytime and anywhere. The value of cryptocurrencies is generally based on how much people are willing to buy and sell them on the market, and their prices can change a lot depending on how the market is doing. Both banks and cryptocurrencies have their own pros and cons when it comes to security. Banks have to follow a lot of rules and use advanced security measures to keep their customers' money safe. They also offer insurance for deposits, which makes sure that customers get their money back if their money is lost or stolen. In the past few years, however, there have been a number of high-profile hacks and thefts of cryptocurrencies. Part of the reason for this is that cryptocurrency wallets are often kept on individual devices, which makes them easy to hack, and if you get hacked, it is impossible to get your assets back. One thing that makes cryptocurrencies better than banks is the low transaction fees. When it comes to banks, fees are charged by them for services like transfers, ATM withdrawals, and overdrafts. These fees can add up fast, especially for people who use these services often. On the other hand, transaction fees for cryptocurrencies are often much lower. This is because cryptocurrencies do not require a middleman to make transactions happen. As a result, this cuts the costs and speeds up the process. Accessibility is another reason why cryptocurrencies are better than banks. Before opening a bank account, customers have to go through a long application process that includes credit and background checks. On the other hand, anyone with an internet connection and a digital wallet can get their hands on a cryptocurrency. This makes them very appealing to people who cannot have a bank account, as they can store and transfer value without going through a bank. Despite the benefits that we explored previously, there are some major issues with using cryptocurrencies. One of the main problems is that they currently operate in a legal gray area, meaning that they are not regulated in most areas. Decentralization is one of the things that makes cryptocurrencies great, but it also means that there is no one in charge of the market. This can lead to volatility and instability, especially when the overall economy is unstable. For some, this may be a good thing, but if we want to achieve mass adoption, we need to make sure that basic regulations can protect the average user from instability and fraud against him. Last but not least, The fact that most people don't use them is another problem with cryptocurrencies. Some stores and businesses accept cryptocurrency as a form of payment, but unfortunately, this is not the case for most. This means that for most people, cryptocurrencies are not yet a good alternative to fiat money. In conclusion, banks and cryptocurrencies each have their own place in the financial world. Banks offer stability, security, and a wide range of services, but they are often criticized for their high fees and lack of transparency. On the other hand, cryptocurrencies are decentralized. They have lower fees and they can achieve faster transaction times, but they also have their own risks and challenges. In the end, your needs and preferences will determine whether you should use banks or cryptocurrencies or both. If stability and safety are important to you, a bank may be a better choice, but if you want a decentralized option with lower fees and faster transaction times, you might want to look into cryptocurrencies. Before making a choice, you should always do your own research and understand the pros and cons of both options. Thanks for watching. If you liked the video on banks versus cryptocurrencies, I am sure you will like this one too.